Indeed, we're here once again to have that conversation. I hope that your week was well that has passed. Today is a very special day because it is the 17th day of August 2025. And today we're going to give a weekly update as to where our account level has been. But what I want you to understand is that when it comes on to your financial future, I want you to take matters into your own hands. The reason I'm saying take matters into your own hands is because there is no one who knows what it is that you desire for your future. You are the one who knows what kind of life you want to have. And based on the life that you want to have, you have to then make a decision as to how you are going to go about getting that life. And in getting the life that you want, we can start in the realm of finances. Yes, finances. So I want you to consider to get your finances in order. It is very important, it is very critical that you have your finances in order. I want you to think about what it is that you have today and think about what it is that you desire to have in the future. If you can look to the future and see the end, and you are now at the beginning, then you can position yourself in such a way to actualize and materialize that which you have envisioned. Remember, when there is no vision, the people perish. You don't have to perish. It doesn't matter where you're starting from. You could be starting from $1. You could be starting from 100, 500, 1,000, 2,000. It doesn't really matter. What matters is the consistent compounding effect. What matters is that you actually start. Don't just think about starting. Don't just think about it. Don't get stuck in the analysis zone. Don't allow yourself to have analysis paralysis. That there is no good for you, it's no good for your family, it's no good for your children, it's no good for your children's children. And remember, a good man leaves an inheritance for his children's children. What kind of person do you want to be? What kind of person do you want your kids to be? What kind of life do you want your kids to have? If you really want your kids to have a good life, if you even want to have a good life while you're existing in this realm, I would suggest to you to put financial plan in place so that you can secure the future that you so desire. While we're on this journey, I want you to understand that there needs to be a distinction between trading, between investing, and between speculation or speculating. So when we think about trading, we are thinking about income generation, right? When we think about investing, we are thinking about parking your money so that your money can work on your behalf. That is usually what you do when you actually have a sum that is tiny enough to put in that vehicle. When we talk about speculating now, we are thinking about putting our funds in things which may be promising if successful and can wipe us out if they are not successful or if they are unsuccessful. So it's a very high risk, very high reward situation when it comes on to speculating. You have to decide if you want to invest, if you want to trade, or if you want to speculate. But I would suggest you the first skill that you need to have is that of trading. If you're starting from the ground floor, you need to understand how it is that you're going to amass finances. How is it that you're going to amass wealth? How is it that you're going to generate income? How is it that you're going to balance your day-to-day needs? You have to think about all these things, and the best way is for you to trade, which means you have to set targets and you have to execute on those targets. When you already have a tidy sum that you can put aside, then you can move into investing, right? So the trading is the active work. Like how people have a 9 to 5, that is what trading basically is. But you don't have to do trading 9 to 5. You can do trading 1 hour, 15 minutes, and that's it for the day. 5 days a week, and in the future it will be 7 days a week, 24/7. So you can do it as much as you so desire. So you have to just position yourself, you have to strategize as best as possible. And yes, you can trade even if you have a 9 to 5 as well. And trading may supplement your 9 to 5. And if you are successful, then it may supersede your 9 to 5. And then eventually you're going to reach a position where your time will be better focused on trading, because your employment is no longer meeting your financial goals and obligations. Then after you have amassed a particular amount, then you can move into investing. And some person will tell you that, hey, you should start investing. It is good to have the concept of what investment entails. However, you have to know in your and of yourself where you are on the ladder. If you are coming from the curveball, you're coming from behind, then you can position yourself to invest, yes, but remember, you only have a short time to live and exist in this world. Are you going to wait 100 years to become a millionaire when you can become a millionaire in 5 years? You may not even live to see 100 years. So what is all of the work that you'll be putting in? What is all the waiting would be materializing to do? How are you going to enjoy the resources that you have been given or gifted when you are 100 years? Can you go on the beach? Can you enjoy life in its fullness, its entirety? That there is something that you have to consider. And then the last thing that I want to make mention of again is speculating. Speculating is basically a situation when there is a high risk, high reward situation. There is something that could be phenomenal, but if it's not phenomenal, it's just not good at all. All right, so that there is where speculating comes in. And after you have traded, you got enough capital, then you start to invest with the capital that you get from trading. Then you are going to now consider speculating. So speculation is not just getting into risky ventures, which is not true in its entirety, because everything has a level of risk and risk tolerance to it. So getting in venture capital funds, doing all these VC rounds, all of this there is a form of speculation. And in some situations you have to be accredited investors in order to get your hands into some form of speculation. But when you are early to the party, we always hear that the early bird catches the most worm. You get the benefit before the others get that which is left. All right, so just bear that in mind. So now I'm gonna pull up our accounts so that you can have a visual as to how we did in the week that was. So at this time, when we pull up our Moomooo account, we're seeing where we have a grand total of $5,189.01. And we have two accounts, as we indicated before. We have the margin account, which now has $3,810.44. And as we look at this account, let's see if we can pull it up and go into the history. If we did any transaction this week, no, we didn't do any transactions this week. The only transaction we did was our SoFi transaction, which we did for the 2027 calls at $35. So SoFi, as I told you, this is a company which has a phenomenal uh, uh, outlook for the future of banking. And I'm a finance person, and I like when companies are positioned for the future. Based on my price estimate for SoFi, I see SoFi at $50. It's SoFi in its current state is underrated. People are rating it or classifying it as a banking company. It's not only a banking company, it is a how should we put it? It is a computer company, not in making computer, but it is a technology company, right? So it is using technology to advance the transformation of the banking industry. It's going to be a one-stop shop. So by the end of 2026, I am seeing SoFi being at least $50. I know that is a bold prediction. If they continue to break all the records and they continue to stick to the plan, then by 2027, SoFi may just be $100, hands down. All right. If you look at SoFi, when the rate cuts occur, then SoFi is going to spike, right? When they do their earning report again and they show year over year growth, then it's going to spike. And with that spike, it's going to create a situation where there is going to be FOMO. And people are going to say, oh my gosh, I missed it. And then people are going to get in. The shorts are going to have to cover. And that is just going to spiral and it's going to spike a little bit further. And if we are positioned in such a way that we have a lot of shorts, then we may have a gamma squeeze, and that there would be a black swan event for this SoFi stock. So SoFi is a company that I believe in. I'll be buying the shares at $35. I'll be buying the shares again at $50, and I'll be buying the shares once more when it reaches $75. So those are my 3 buy points for SoFi. After 75, that would be the cutoff for me buying SoFi shares. And right now, SoFi is just at about $24, almost $24, not $24, about $23 plus. All right. Now we move to the cash account. Let's see what the cash account is. The cash account this week didn't do as great as we would want it to do. The cash account is now at $1,378.57. We had a shortfall with BBAI. They didn't do as lovely as they could have done, so that there took us down a little bit. All right, that is just something that we have to deal with. So the next thing that I want you to know is that these two accounts, we started them out with approximately $1,000, a little less in one. The cash account started with about $900. The margin account we started with $1,000. So this is $2,000 we had in this account, and within a few months we have doubled that account value. So we are making progress. Right now we are 92% in options, 4.5% in stocks, and 2.82% in cash. All right, so for the last year to date, we're up 124% on this account so far. So this week we had a down day on Thursday. We had negative 0.56% down on the account, but we made that back up on Friday. So all in all, this week has been a good week so far, and our return for this month so far is 6.9%. So we are making progress incrementally. All right. So all I want you to do is to remember it doesn't matter where you are, as long as you decide that you want to move forward, you want to change your life, you just need to start now. Let us move into our next account, which is our Webull account. And if you want the links to these two brokerage, the Webull or the Moomooo, the links will be listed below in this video. These are two accounts or two platforms that I prefer. And the reason why I prefer these platforms is that they give you 0% commission free trading. And this here reduces slippage. Slippage is when you have fees, you have charges that eats into your profit. So you're losing money before you start to even make money. So the other established legacy brokers, they have a lot of unnecessary fees, and they make most of their money from the fees that they charge to execute the contracts. But we're in a modern time, people are not standing for those legacy ideologies anymore, because we have access to information, we have access to technology, and we know that the world is moving in a different direction. So as the world moves in that direction, we are going to be moving with the platforms which are in line with our vision of the future. So let us get back into this account. This account was the account we started with 500, and we also had another section where we had 100. We are still to deploy the 100 after we had closed our last position, after it had gone up by 23%. We were supposed to redeploy that 100 and allow it to continue its multiplication process, but that has not occurred as yet. The time had slipped us, so we have not yet done that. We have changed to a degree as to how we're going to operate with this account. We have decided that we're going to use this account to demonstrate or to indicate what incremental increases, incremental contributions can do. So as you can see, this is where our account is at this time. What we're going to do is that for the traditional account, we are going to take the profit that we have incurred, that we are not yet ready to pay taxes on. We're going to take that profit from the individual cash account and move it over to the traditional IRA, so that we can write that off in the near term, so that we don't have to pay taxes on it if the need arises. All right, and what we're going to do is to contribute the required amount in the Roth account, so that we can maximize the tax-free nature. So just have a look as our current positions and what we are observing in this account at this time. All right, so this is where we are, and the Roth account, we have 1 shares, just to remind us that we were in this position, and now we're going to be closing out of this said position. And a traditional account has $0. So this is where we are. But remember, all you need to do is to have a vision of where you desire to see yourself. If your dreams, if your visions, if your ideologies, if the future doesn't scare you, maybe you're not dreaming big enough. It takes time, it takes effort, but at the end of the day, you are going to be the recipient of the blessings that comes with the increase. And with that blessing, you can share it with those you love, those who have been standing by you, those who have guided you, those who have supported you. Until we meet again, be safe in the markets.